Welcome back, everyone. Today we'll be taking a dive into National Grid and one of my favourite dividend pairs in the entire UK. Now, they are part of my own portfolio, but this will be as unbiased as it gets. Now, why are they worth watching? Well, first off, their wee snowflake analysis here. They are a good value stock with a proven track record, and they pay a dividend according to all these metrics. They are, of course, one of the backbone of the UK's national grid. They transmit and distribute electricity and gas across not only the UK, but over in New England and the US, where they service around 20 million people, which, of course, it's obviously great to diversify. They're currently trading at £10.33. They're down 5% in the last 12 months, and their ticker symbol is NG. But first, the best place to start with any company that we look at is, of course, their website. So over here on National Grid, you can look into them and find out what they do, where they operate, and a few interesting things such as National Grid Ventures, which is something definitely recommend you check out. From here, you can see everything from even trying to get a career at National Grid to their investors section, about us, stories, responsibility. They also have What is National Grid, a really useful video over on YouTube on their own page, and it gives you a bit of a breakdown as to what they do. Again, it is primarily the transmitting of electricity, so all those pylons, cables, wires that you see dotted across the country, well, a lot of them are used, serviced, and relied upon by the entire nation. They all belong to National Grid in some way or another, even gas as well. Now, once we've had a deep look into their website, the best place to go to next, of course, is simply Wall Street, where I started earlier. Their market cap sits at 38.1 billion in sterling. They're trading at 1.6% below their estimated fair value, so we'll have a wee look at that. Earnings are forecast to grow 3.71% per year. They grew 147%, but COVID and a few other things kicked in for that one. Now, a few risks. Their debt isn't well covered by operating cash flow. Note the phrase not well. So it is covered, but obviously sort of 20% is the usual for well covered and beyond. So it must be beneath that, but it is covered. Dividend of 5% is also not well covered. But as we've seen, their dividend and value sits pretty well. Past performance also good. So let's jump down their competitors, and there's nothing really. None of them are particularly close to them, maybe SSE in a sense, but we'll carry on down here to their price history and performance, where we can see a few of the things that has been going on in the last year. We'll drag it out to the last 3 years. Their max been about £12.46. Their lowest point back during COVID was actually £8 back in March of 2020, a date many of us are very familiar with in the investing sphere. Now, they obviously had a good climb in 2021, a bit of a dip into 2022, and again back there when a lot of UK stocks got hit pretty hard in October of 2022. Now, no particular bad news as at the moment, and they're considered not that volatile in terms of the industry as a whole. Integrated utilities. Now, a wee thing about the company. Founded in 1990, currently employs 29,292 employees. Very cool number there. And their CEO is John Pettigrew, so we'll have a look more at that. You can look in, feel free to pause and have a wee read of the entire thing there. It's always interesting to know. Now, when it comes to their fundamentals, they have a P/E ratio of 12.9 times and a price to sales ratio of 1.8. So that's nothing out of the blue or out of the ordinary. We'll see how it stacks up to the industry of utilities later on here. Last reported earnings was September 30th, 2022. And as you can see, revenue, gross profit, operating expenses out of the way. We've got earnings of 2.9 billion, which is about a 13.99%. When you're wondering why their gross margin's 100%, it is because of the type of company this is. Just like banks and insurance companies, some of the metrics aren't exactly the same as some normal companies. So it's something to bear in mind. Debt equity ratio sits at 187.2%. But again, this is something we will look into further in the video. Payout ratio 64%. Current yield 5%. That's nice. On to the valuation, they score 4 out of 6. So we can go through here. And well, compared to peers, SSE is a lot higher. Severn Trent is also much higher, but again, that's a completely different industry well, it's not a complete different industry, it's still utilities, but they do obviously water and waste management as well. Industry average 17.6. They're alongside Qatar Electricity and Water Company and the YTL Corporation. Anyone else a wee bit more familiar nearby? A few other power and utility companies. So they're considered a wee bit lower than the industry average, which is good. When it comes to their share price and versus fair value, this is a discounted cash flow model. They are 1.6% undervalued. Fair value £10.49. Sounds about right. Currently trading at £10.33. So whilst you're not getting a huge discount based on this model, we'll see how it looks on an intrinsic value model, which I think a few years, if you're interested in the stock, might like the intrinsic model as a wee bit more. Future growth 3.7% forecasted. So they had a wee bit of a boost there over COVID. Well, exiting COVID more like, and it's forecast to decline a wee bit. Bringing up free cash flow. It looks like even free cash flow will be declining into the future. But again, because of the nature of this company, that's not the biggest concern at the moment. Now, let's jump down to past performance. We can see things were going moderately well up in the run of 2018, 2019. Nothing major, but they had a dip over 2020. And they kind of resurged out of it 2021, 2022. So that was good to see. Operating expenses seems to be the same. Actually lower per year. There you go. And cash from operations, 6.3 billion. Nice. High quality earnings. Down to financial health. Okay. So 14.40 billion in short-term assets to 20.20 billion in long-term liability or short-term liabilities. When it comes to long-term, things obviously look a wee bit more in National Grid's favour. Now, debt to equity history, we'll have to have a look at this. And whilst this does indeed look like a rather scary chart, when you throw in cash and equivalents, they still have about 2.945 billion in cash sitting about. They also have 48.5 billion in debt. Now, debt isn't a scary thing, provided that you can bare minimum cover the interest payments, which are well covered at a 3.5 times. And then their debt's not well covered, 13.1%. Now, it is covered, but cash flow is meant to, or operating cash flow is meant to remain pretty steady over the next few years. So that obviously is good to see. But that is definitely something worth keeping an eye on. That's why they're always worth watching. Now, let's see the makeup of their balance sheet and what they have here. We'll have a look at another one of them on Alpha Spread. Down to their dividend. It's notable, not high. It's stable. It's growing, covered by earnings, not cash flow, though. 5%. Industry average, it's a bit higher from 4.9. It's actually forecast to grow in the next 3 years to 5.6%. Nice. And it has been growing, as you can see, very consistently, sitting between 4.5% to 5.6%. That's pretty impressive. No matter what, they seem to always produce a really good yield. They didn't cut their dividend per share at any stage. So again, a lot of good things going for National Grid for sure. Now, obviously, the cash payout to shareholders is massively under, minus 1,385%. But there is definitely more to it, as you've seen a lot of the cash flow. Again, this company is to be considered a little bit differently, bit like insurance, bit like banks. Management, 3-year average management tenure, not the highest, but their CEO, John, has been in for 8.75 years. Nice. And under his watch, you can see company earnings they've had their ups and they've had their downs, but he's definitely pulled them back, exiting out of COVID. Hopefully it continues. Biased because I've got shares in them. Now, down to ownership. Let's see how the breakdown here is. Institutions make up 77.2% and general public at 22% behind them. Now, we can see BlackRock, Capital Research and Management Company, Vanguard and Abu Dhabi Investment Authority are actually the top 4. Legal & General come in 5th there with their LNG Investment Management Limited. Nice. Anyone else notable? Nah, no one too notable from there. Okay, let's jump over to the next resource, Alpha Spread. Good, free resource. You can get 3 companies every week to have we look into their intrinsic value. Now, this takes their relative value model and the DCF model we seen earlier, discounted cash flow. They smoosh them together, give you an average, and at the moment, it's a whopping 51% undervalued with this model. £21, whilst they're currently trading at only £10. Now, you've seen the discounted cash flow model gave it only a £10, 49 pence. So again, different model, but something to definitely look at. Gives you a wee bit of a different breakdown on financials and their balance sheet composition, alongside efficiencies, net margins, and then another really cool addition on this is their Wall Street price targets as well. Highest forecast, lowest and averages over the next few years, and then a few of their competitors. Very useful resource. Be sure to check it out. All links are in the description below. Right, okay, next free resource, totally great. You need to know that this exists. Google Finance, simply by typing in National Grid stock, or you can do their ticker symbol NG and LON for the London Stock Exchange, and you'll be greeted by this screen. You can get everything here. You can check out their chart over the last 5 years. You can get a bit of financials here, pay ratio, dividend yield, just a quick wee glance, a bit like Simply Wall Street, but this is completely free to use at any time. Also has news as well, news articles, and a lot of you use Google, so it's a good resource to have available. Financials, and you can compare them to other companies and access their wiki or company page. Right, next is Dividend Max, another really handy website that you need to know exists when you're doing dividend investing, because it's free and it's really useful. Now, you can pay for the premium on this, as you can for most of them, except Google. I don't think Google has a premium you can buy, but we can see here that they pay 2 dividends per year. I can give you a quick wee tour of this website. When it goes X, so the date that you have to own the share before you get entitled to the next dividend payment. Currently, it's the 1st of June, which means you'd need to own the share the day before that in order to be entitled to the dividend payment out on the 9th of August. Now, I think I'm currently rocking at least 30 shares, so my next payment is expected to be about £5.35. So that's pretty neat to see. Okay. Oh, was trying to renew something there. No, my subscription's expired. Might renew them, but the other thing is their annual dividend chart, and you can see that it has been growing back in 2006, 26 pence a share to a whopping 50.97 pence per share in 2022. All right, and then on to my last website for National Grid here. Of course, it is Trading 212, the website that I use, just to show you my complete bias towards this company. I bought in, my average price, I pound cost average into any company that I have dividends in, and I currently have 40 shares, actually 10 more than I thought. There you go. Value £413. We're actually up 4.75%. Now on Trading 212, you can get some company details, gives you everything you need to know. Again, another glance at financials. Always good to have several resources that you can use, and one of my favorite is their cash flow. You can see that a lot's been spent on investing, and then what they made in operating and financing as well. Okay, links are all in the description. If you need to use any of these websites, feel free. And I'll catch you all in the next one. Thank you for joining me. Bye-bye.